All right, everybody. So today was a crazy day, and we're just going to get right into the technicals here. So this is a midweek recap video. Now I'm going to start this off as usual. So we're going to look at the Fed funds future spread, and this is basically the spread between the March contract and the December contract. So right now, it's still giving us this reading that's implying just one rate cut. So even after today's FOMC meeting, even after today's CPI print, even after all of that, it's ultimately remaining unchanged here. I mean, this is still giving us the same exact reading, or pretty much the exact same reading as we had the prior day. So yeah, I mean, we're basically still pricing in one cut here. Nothing has really changed on this front. So let's go ahead. Let's move on. Now, the Qs. So the Qs was a little bit interesting today, and there is one line that I do want to draw here. So let's go ahead and let's draw that right now. So I'm basically drawing that from this support to that support to this right here. So as you guys can see, structurally, if we're zooming out, nothing has really broken. But if we're looking at the structure within the wider structure, then yeah, we pretty much just had a break right here. So this was support, and now we broke out of the shorter term support. So let's just go ahead and zoom out here. So now I'm going to go on the 10-year 1-day. Now this looks really, really clustered here. So let's just zoom in right here. So as you guys can see, this is essentially what happened. We hit the upper range of this rising wedge right here, and then we broke out of the shorter term support right here. So structurally, like I said, in the in the grand scheme of things, nothing is structurally broken here. Everything is fine. It's just this trend within this wider trend that has been broken. So also there is something that, we do want to pay attention to. So, if we're zooming out a little bit here, we can see this anchored VWAP right here, this 316.18 level. As we can see, it's anchored to the all-time highs here. So we did cut underneath that. So that's one thing to note. Now, if we're looking at MACD, we do have a sell signal on the MACD, but you want to be cautious with this. When the sell signal initially appears, sometimes it can uninvert itself very quickly, especially if we have a massive green day. So let's just go ahead and zoom in on that so you guys can see that sell signal very clearly. So right there, the blue is crossing under the yellow. That's the sell signal right there. So this sell signal is currently in place, and this is kind of making the Qs a little bit dangerous. But, there's something I'm going to bring up a little bit later in this video that kind of makes me question the sell signal just a little bit. And also pay attention to what's going on with the RSI. So we cooled off a lot. So, earlier we were almost at the 70 levels for RSI. Now we've cooled back almost to slightly above neutral. So we're at this 55 reading for the Qs. Now, let's go on a shorter time frame. So I'm going to look at the 30-day, 30-minute chart. And let's just zoom in right here. So we got this gap fill right there not too long ago. And now we cut underneath this prior gap fill level. So what's the next gap? I mean, this next gap right here is around 307.26 to 310.84. So we're still above that for now, but it could be very possible that we just flush to essentially fill this gap. So you got to be a little bit careful here. Now, if we are going on an even shorter time frame, so let's go on the 10-day, 5-minute chart. There's this gap up here that never got filled. So this is right around 318.41 to 318.73. So, it could essentially be possible for us to just rally up from this level and fill that gap. That's entirely possible. Or we could go ahead and fill that downside gap, or we could just chop a little bit more in this range between this upside gap and that downside gap. So there's a lot of different possibilities that can happen. But, as I mentioned before, let's zoom out again. So as I mentioned before, we are underneath this all-time high anchored VWAP. We broke through this recent trend line that was, our prior support. We rejected off of the top of this rising wedge. And hey, you know what? What's down below? I mean, this anchored VWAP right here from the bottoms, and this bottom support line from the rising wedge. So we'll zoom out again. So now we can see this very clearly. Rejection right here, below the anchored VWAP. Now we got this 50-day moving average right here. So, if we were to slice underneath and we were to fill this gap right here, we have the 50-day right at 304.18. That will act as support. And are we just going to knife right below that? Well, maybe, and maybe not. We still have this 200-day right at around 291.95. And that's below this anchored VWAP, and it's actually below this rising wedge right here. So let's say we actually break below this rising wedge. Well, maybe we could just rally right back into it if we bounce straight off this 200-day. But at this point, something will structurally be broken. And I do think that it's more likely that we could break underneath the 200-day. So there's always that possibility that when we break the structure right here, that more bears will actually pile on to actually break us underneath this 200-day. And maybe by that time, the 50-day will start curling over. And then there will be a more likely scenario that, maybe a month or two down the line, we could get a death cross. So that is a very possible scenario if we were to sell off further and if we were to cut underneath this rising wedge structure right here. But as of now, like I said, nothing is structurally broken. All right, now moving on. Or actually, one more thing that I want to cover. So let's go ahead. Let's look at VXN. So VXN is NASDAQ volatility. And we're going to look at a shorter time frame. So we're going to look at the 10-day, 5-minute chart. And if we're just looking right here, I'm going to zoom in a little bit. So when we got the initial MACD sell signal, I was a bit hesitant because we had this massive gap on volatility. Now, gaps on volatility, they usually get filled pretty quick. So sometimes I see this get filled on the same day. Sometimes I see this get filled on the next day. But usually it's filled within a couple of days. So we had this massive gap up on volatility. And if volatility gaps are getting filled to the downside, that's usually implying bullish price action on the Qs or whatever the volatility index is following. So for the NASDAQ, it's VXN. For the Russell, it's RVX. And for SPY, it's VIX. So, when we did get this gap fill right here, and then you pair that with the MACD sell signal on the Qs, well then, yeah, that's a combination that's a little bit dangerous. Because what was keeping us bullish before was that we had this massive old gap, and then we got that filled. And then from that fill, we got a rally. So, right now the situation's a little bit dangerous. I'm going to admit that. But we're going to go on later in this video, and I'm going to tell you what I'm kind of thinking that may happen or may not happen that could essentially just invalidate that MACD sell signal that we saw in the Qs. So now moving on, we're looking at the SPY. So if we're looking at the SPY, the MACD right now, it's okay, but it is kind of flattening out. So we don't quite have that sell signal here yet, but it is flattening out. That's something that you got to watch out for. And as far as RSI goes, it's at 58. So RSI on SPY is actually higher than RSI on the Qs. And that was completely the opposite just a few days ago. So the Qs have definitely cooled off a little bit. Now, pay attention to what's going on here. So if we're looking at the SPY, we had this rising wedge right here. And as you guys can see, we basically hit the top, and now we're pretty much hitting the bottom of this rising wedge here. So we're actually slightly below this bottom of this rising wedge here. And we also have 3 gaps down below, so that's a little bit dangerous. Now, pay attention to where this anchored VWAP is. It's at 407.52. So we're still above that. We're at 408.05. So right now, we're still okay, but, something has kind of broken here structurally. So a little bit signs of caution here, definitely. So, we're going to zoom out a little bit again. And, let's just look at this broader structure. So this right here, head and shoulders that a lot of people are talking about. Now, if so many people are looking at this, is it actually going to happen? That's always the thing. So, this might just be a fake out, and then maybe, we don't break below this 407.52. Maybe we rally from here, and then maybe this becomes a double top scenario. So these are always things that you got to watch out for. But as of now, the structure definitely looks a little bit dangerous because notice right here, we had this double top scenario, and then we fell, and then we created this head, and then right here, what do we have right here? Well, we have the similar double top scenario, and we're basically sitting right above this important anchored VWAP. And if we zoom out even more, that anchored VWAP is coming from the all-time high. So this is a very important level that you guys need to watch. And, right now it's definitely looking a little bit dangerous. And we do have earnings coming up soon. We got bank earnings on Friday. We got a ton of bank earnings on Friday. So is that going to trigger a sell-off on the SPY? Because it certainly can. And, right now we could easily fall right back into this anchored VWAP sandwich. So if we're looking at this anchored VWAP sandwich, it's right around, it's basically where this 200-day moving average is and 407.52. So that's 393.79 to 407.52. So that's a pretty big range. That is essentially a $14 range. So that would be about a 3.5% move to the downside that could happen. So definitely something that we need to watch out for. So that's basically what I got on the SPY. Now let's go ahead. Let's look at the VIX. So I've said it many times before. What I really want to see to be very, very bearish on this market is for the VIX to actually hit this level right here. So this macro level trend line that goes, so if I just go to the 10-year weekly, this goes several years out. So this macro level trend line is very important. We're very close to hitting this. So, if VIX were to fall a little bit, that would imply that SPY is going up a little bit. So do I necessarily think that this right here is the massive sell-off that's going to trigger, this huge correction? Not necessarily. I'm not quite feeling it yet. When I do see SPY inch up a little bit higher, and I start seeing VIX go sub 18, that is when I'm going to be super, super cautious in this market. That is where I think a lot of bad things can happen. Because if you're just paying attention to this trend line, every single time we hit this, we see a massive rally on the VIX. And then, you can see right here, right there, right there, right there. And we're almost there again. We are so close to being there. Does that mean that VIX can't produce a massive rally here? VIX can produce a massive rally here. We've seen it before. So this level right here, it's right around like 1863. We can produce bounces off this level as well. So it doesn't have to hit this trend line. But, if it did hit this trend line and then we had a massive bounce, I would feel much better about a big sell-off coming. So as of right now, I'm not seeing exactly what I want to see on the VIX. All right, now what about the dollar? So same situation. So we've got this macro level trend line here. So I need to go on the weekly so you guys can see this perfectly. So you guys can see it right there. And then we're very, very close to this as well. So the dollar would need to go sub 101. So it would almost be like this. It would pretty much be right at 101 is really what we're looking at. So right now we're at 101.53. So we're very, very close to this. So if we were to just inch down a little bit further, and let's say that the NASDAQ and SPY rally a little bit more, VIX falls a little bit more, then at that point, I would think that things get very, very dangerous. So I'm actually expecting possibly next week, and if not next week, then maybe as soon as the beginning of May for things to be a little bit more dangerous. Because like I said, I'm paying a lot of attention to this macro level trend line on the dollar and the VIX. So these two things are very, very important to me that I am closely monitoring. All right, now let's look at Microsoft. So Microsoft, we got that sell signal on MACD. So let me zoom in on that for you. So as you guys can see, MACD is clearly crossing over right here. And that can also quickly uninvert if we do see a massive bullish candle on the daily chart. Now, if we're looking at RSI did pull back quite a bit. So we were in this high level, very close to 70. Now we're at 58.12. So, it's slightly above neutral. And I will kind of say, it's not necessarily overbought. It's not necessarily oversold. So it's pretty much neutral right here, I would say. Now, let's just go ahead and take a closer look. So we're going to go on the 10-day 5-minute. So this is one of the reasons why, I'm not fully convinced on being fully bearish, because we have these upside gaps. Look at these upside gaps. They are massive. So this first gap right here, it's 385.98 to 288.52. The second gap right here, it's 289.22 to 290.85. So what if we get some price target upgrades? Because, it seems like every other freaking day when we get a down day, the following day is, hey, you know what? Microsoft is now worth $360 by so-and-so firm. Or, we get some sort of bullish news on AI. ChatGPT 4 is doing this and that, whatever. And then we all of a sudden rally. So I almost feel like the analysts are playing this game with us. They're trying to essentially just squeeze all of these shorts who probably happen to be retail. So definitely, I'm looking for these upside gaps to get filled. And, maybe that doesn't happen because, we've seen gaps on Microsoft not get filled in the past and not necessarily get filled right away. So let's just go ahead and look for evidence of this. I mean, right here, that gap didn't really get filled. Neither is it getting filled right here. I mean, we could have just inched up a little bit more to fill this gap. And then that could have been a strong signal to possibly sell because that would align with the top of this wedge. Maybe we still get that. It's very possible that we could still get that. And this pullback is just a hoax. So, as of now, we do still have these two upside gaps. So what about the downside gap? We always got to talk about the downside gap. So let's go on the 30-day, 30-minute. There is this downside gap right here. It's at 275.50 to 278.34. So that could happen. I mean, that could very possibly happen. So, the situation right now, we got two upside gaps, one downside gap. What's closer? The two upside gaps. So this is honestly my least favorite scenario because we have these upside gaps and these downside gaps and we're literally just playing this tug of war. So as of now, we got that MACD sell signal on the daily time frame, but we have these upside gaps. So you got to be cautious here. I mean, a lot can happen. And we do have this important support. It's right at 281.15. So, we're pretty darn close to that. We actually did rebound off that, as you guys see. So right here, this was an area of accumulation. And then when we broke above that, we got to where we are right now. So clearly, this area is going to act as support. That's 281.15. We rebounded off of that. So that's something to definitely keep note of. Now, let's go ahead. Let's move on. So now we're looking at Apple. There is a lot going on Apple. But, to summarize, we got this MACD sell signal. So let's zoom in on that. So you guys can clearly see MACD sell signal. RSI has fallen drastically. We're at 53.83. We were in these 70 levels here. Now, pay attention to where we're at right now. So we are right on this trend line. So what is this trend line? If I zoom out and we take a closer look at this, you will notice, let me actually go on the 10-year 1-day. So you'll notice that the trend line that we're on right now is this trend line that's connecting this top, this rejection zone. And look where we're at right now. We are right there. Now, let's go ahead. Let's look at a shorter time frame. So I'm going to look at the 10-day 5-minute chart and look at this massive big old gap. So we definitely got that news about Apple. Their PC sales are basically lagging as. So now we got two upside gaps on Apple. So if we're looking at this first gap, this is starting right around 161.94. It goes up to 164.44 if we want to fill it. There is this smaller gap up here. It's right around 165.06 to 165.49. So hey, you know what? Now we got two gaps to the upside on Apple, two gaps to the upside on Microsoft. So like I said, this is one of the reasons why I don't want to be too bearish, because we have these upside gaps that could easily get filled. And that would literally send the Qs and SPY rocketing. So right now, I'm not too confident in shorting this market, even though we do have that MACD sell signal on the Qs. So, right now I'm really torn in between being bullish and bearish, because I see a case for both. So now moving on, let's look at Tesla. So Tesla, if we're just looking at all of these anchored VWAPs, let's just zoom in on more recent price action. So if I zoom in, look what happened right here. We had this support trend line. We went all the way up to it only to reject. So look at that rejection right there. There is a hard rejection at that level. So where are we right now? We're at 180.54. And that's pretty much right in this chop box right here. So this chop box is right around 175.85 to 185.13. Now, if we look down below, so down below, we have this anchored VWAP at 178.82. And then right below that, we have this anchored VWAP at 176.23. So you guys can see that in the last recent fall right here, we did bounce off of this level. So this 176.23 does seem to hold a little bit of weight, as well as this 178.82, which we bounced off several times before. So you guys can see that in the past, we did bounce off of that support trend line, and then we rejected off of that anchored VWAP right there. But then we did make it back above. And then when we were above that, we rallied for a little bit, and then we almost made it to this upper anchored VWAP right here, and then we fell right below this trend line. So right here with this trend line rejection, it doesn't look too good, and we're also underneath the 50-day. So 192.29 is the 50-day. Now let's just zoom out a little bit more. Let's see if we see some other stuff here. All right, so if we are looking at the moving averages right here, we can see that this 200-day moving average is kind of flattening out right here. This 50-day moving average is flattening out right here as well. So that's not necessarily a good sign as well. So right here, this 50-day moving average, it was sloping, and the slope was rather steep, but now, this is flattening out. So that's not a good sign right here. So now moving on, let's look at XLF. So XLF here, I talked about this on the weekly chart. So as of right now, if we're looking at the daily chart, it does look like we could see a potential death cross on the financial sector. So that is not a good sign. So the financial sector, it's got Bank of America, it's got JP Morgan, it's got Wells Fargo, it's got all of these bank stocks in there. So to see a death cross on the financial sector, that is not a good sign. That would essentially drag SPY down if we were to see some bearish follow through. So let's go ahead. Let's look at the weekly as well. So if we're looking at the weekly, we are ever so slightly above that 200 weekly at 31.91. And we're below that 50 weekly at 33.73. And if we're just looking at this macro level trend line right here, we are just, let's actually see if we're above this or below that. We're ever so slightly above that. So as you guys can see, if we were to have a close underneath this macro level trend line, as well as the 200 weekly, then that increasingly becomes more and more bearish, especially if we get that bearish crossover on the daily time frame. So let's go ahead. Let's move on to the next one. If we're looking at Dow Jones Industrial, so the DIA, tradable ETF here, not a whole lot happened today. So if we're just looking at the Dow, so right now, still looks okay. We got this 200-day moving average that's curling slightly up. We got this 50-day moving average that's starting to flatten out. Maybe it's going to start curling down. So what could that produce? That could produce a death cross. But as of right now, we are still above this resistance breakout line. And we do still have this support trend line here. So if we do go out, let's go to the weekly. So you guys can see how much weight that this trend line right here holds. So this is a macro level trend line. And as you guys can see, we did bounce off of this level. And this could act as support in the future. So, let's say that we were to just fall immediately right now. Well, then, we could still find support right around 320. So that's not that much of a fall. So until we break this trend line and until we get underneath that 50, then I wouldn't be too worried. Now, let's just kind of look at the moving averages here. So yeah, if we're looking at the 50 right here on the daily time frame, that would be 331.20. So if we were to get below that, then yeah, and we were to get below this 200, that would take us back to this support trend line right here, which is the macro level trend line. So yeah, I mean, there are several supports down along the way. So I'm not too worried about the Dow just yet. Now let's look at IWM. So IWM looks a little bit shitty to me. So if we're just zooming in right here, look at that. This 50-day moving average is so close to this 200-day. And it's very possible that we actually get the death cross on the IWM. So what a lot of people forget is that the IWM tends to tell us a lot of things because it often front runs the move, and then we start seeing follow through with the other indices. So the IWM, you know, it's got a ton of stocks in it. And yeah, I mean, it's got the regional banks in it as well. So something to definitely watch out for is that potential death cross that could happen. So if we're looking at the 50-day right here, you know, that 50-day is pretty much right around 183.33. That 200-day moving average is at 181.06. So they are very close. Now let's go ahead and look at a shorter time frame. So if I'm looking at the shorter time frame right here, we did just recently see a gap fill. So let me just go ahead and move that. So you guys can clearly see that right here, we did fill that gap right there. So, you know, the next thing is, okay, well, what now? Are we going to rally from here, or are we going to sell off more? So that's what we don't know. So what we do need to watch out for is, can we get back above this gap area? Because if we can't, I do think it gets increasingly bearish. Now, let's just go back to that 10-year, one-day time frame. So, you know, this index also has a macro level trend line as well. So let's go back. Let's look at the weekly. So if we look at the weekly, you guys can see it's basically pivoting off the same level. So, you know, support right there, support right there, support. And then right now we're kind of chopping back and forth between this area. So you guys can see we went down here before, we rallied, we rejected, rallied, rejected, rallied, rejected. And we're pretty much just chopping back and forth here. So, you know, we will see where do we end up this week. So on this week, you know, are we going to close above this trend line or below it? And, you know, if we do look at the weekly time frame, you know, I mentioned this before, we have the death cross on the weekly. So as of right now, this doesn't look good. We have the death cross on the weekly. We look like we're going to have the death cross on the daily as well. So that would be basically a death cross on the daily and the weekly. To me, that is extraordinarily bearish. So definitely watch out for the IWM. If I'm looking at key support, we don't want to go underneath this 166.76 level or this 165.76 level. So you guys can see that, you know, this was this pre-COVID high before we saw this massive sell to the downside. So something to just keep in the back of your mind. All right, now lastly, you know, let's just look at a few stranglers. So let's look at Meta real quick here. So Meta, if we're looking at the MACD, it's kind of hard to give a reading off this MACD right here. It's kind of just chopping back and forth between the signal lines. So right now, I wouldn't necessarily say it's a sell signal or a buy signal. Right now, it's pretty much just flat. Now, if we're looking at RSI, RSI has been extended for a while on Meta. So now we're at the 66.7 reading. It's still pretty high. So I would definitely consider Meta to still be slightly overbought. Now let's go ahead. Let's look at a lower time frame right here. So if we are looking at this lower time frame, you know, all the upside gaps here are filled. So what about this downside gap here? There's a massive gap right here at 201.18 to 202.63. So one thing that I am paying attention to, let's just zoom out a little bit. So I'm paying attention to this trend line right here. So maybe I could go on a lower time frame. Let's go on the 90-day, 1 hour time frame. So if we were to fill this gap, you know, that could essentially coincide with this support trend line right here. So, you know, I think it's possible that we could fill this gap, but maybe we just chop a little bit more and then we don't fill this gap and then we just continue chopping sideways to eventually hit the support trend line. And then maybe from there, we do get a higher bounce up, or maybe from there we actually sell off. So these are things that you got to think of. But if we do see further momentum, I do think we're coming down to fill this gap. So that's essentially what I'm seeing on Meta right now. And let's go ahead. Let's look at Google. So this is going to be the last ticker I look at here. So let's go ahead. Let's look at the 10-year 1-day. So structurally on Google, nothing is broken. So we had this basically resistance trend line right here. We rejected several times off of this. We had this fake breakout right here. But this right here, we had this breakout. We had a back test, and then we basically bounced off the 200-day right here. So the 200-day is right at 101.69. So as of now, it still looks okay. Now, am I saying buy this? I'm not saying buy this. Am I saying sell it? I'm not necessarily saying sell it either. I'm just saying as of now, everything is still structurally okay. Now, when do things become structurally not okay? That's essentially when we break underneath this 50-day moving average and we fall back into this wedge. So if we were to break this 50-day moving average, that would be right around 98.97. And if we're just looking at the MACD, we do have the beginnings of a sell signal right here. So, just like the Qs, just like Apple, just like Microsoft, it looks a little bit dangerous here. And let's go ahead. Let's look at the lower time frames. There is this massive gap right here. So this gap is right around 107.95 to 108.83. So, let's just talk about all the gaps we have. We have a gap on Microsoft. We have a gap on Apple. We have a gap on Google. So there you go. We got 3 mega cap stocks with upside gaps. So, this is a conundrum. We got the MACD sell signal, but we got several mega cap stocks with upside gaps. So that basically concludes this video, and I hope you guys have a good one.